Hello and welcome everyone. A very good day to you all. So yes, today I'm Pragya and this is going to be our third class in a row. Friends, we are preparing for the upcoming exam of Union Bank of India for the post of Local Bank Officer, that is LBO. So yes, this is going to be our 30-minute session and we will be covering the banking and financial awareness portion in the form of multiple choice questions, right? So more information is there which I should be providing you guys. Our channel Knowledgist is providing you all a new course. In this new course, you would be getting live classes along with the recorded sessions in case you would be missing out any of the live streams, right? Mock tests would be there along with it, 5,000 plus banking CQs and one-on-one expert faculty would be 24/7 available for you guys. All the subjects would be definitely deliberately covered. So yes, if you are interested to go through these classes and purchase this whole new crash course, you can definitely check out the description box. The link would be provided there. Otherwise, you can contact us on via WhatsApp on a direct basis, right? So yes, friends, without wasting much time, let us conclude these whole informations and sum up with the banking and financial awareness portion of ours. So the very first question, what is it asking? It is asking, what is a key component of the Viksit Bharat strategy for PSBs? If you would be remembering, if you would be there in previous session of ours, then the last question was also about PSB and Viksit Bharat strategy was the answer. And this one is going to be the second part. You can call it a second part of the previous question. So yes, it is simply asking what is going to be the key component of Viksit Bharat strategy for the PSBs. Whether expansion into international markets, development of green energy projects, option C, that is onboarding sector specific advisors and developing credit underwriting models, or option D, that is increasing focus on retail banking services. So yeah, it is a very straight question, simply asking the key component of Viksit Bharat strategy for the PSBs, whether it is option A, B, C, or D. Now, have your time, have 5 seconds, 10 seconds around. I will be providing you guys. Go through the question properly. It is a straight question. Whether it would be the expansion into international market, the main object would be this. Development of green energy projects would be considered. Onboarding sector-specific advisors, development of credit underwriting models. What is it going to be? So Jimmy Writing is saying it is going to be option C. Anyone else? It is simply talking about Viksit Bharat strategy's key component for the PSBs. Do you know what is PSB, friends? Anyone? What is PSB? Jimmy Tiger, what do we mean by PSB? Is it public sector bank or is it talking about the Punjab and Sindh Bank? What is this PSB? Anyone? So yes, here friends, PSB stands for basically the public sector banks. Okay. So yes, if we talk about the key component of Viksit Bharat strategy for PSBs, then it is going to be, of course, option C. Yes, great, Jimmy. It is option C, which means the onboarding sector specific advisors and the developing credit underwriting models has already been acting as the component of our VBS, that is the Viksit Bharat strategy. So a significant part of Viksit Bharat strategy involves PSB's onboarding sector specific advisors along with the developing credit underwriting models. What is the reason behind it? It is just to expedite loan approvals and also undergo the enhancement of sector specific capabilities further. So yes, Niladri, you are also correct this time, dear. The correct option here is option C. Coming up to another one, which is asking, what change has the IBBI proposed regarding the response time for corporate debtors to default confirmations? Whether this time has been decreased to 7 days, maintain at 9 days, increase to 21 days, or option D, that is remove the response time limit entirely. Okay, So what has been changed now? What is the new change that IBBI has proposed? What is IBBI? Anyone? IBBI, full form of IBBI, it is Insolvency and Bankruptcy Board of India. So yes, what is that certain change which IBBI has proposed regarding the response time for the corporate debtors to default confirmations? What should it be? Have few seconds, think about it properly. We are not running out of time. We are not running late. Take your time. Niladri is saying it is 21, which means increase to 21 days. Okay. Others? Jimmy, what should it be, dear? Yes, Jimmy, you are absolutely correct. IBBI is the Insolvency Bankruptcy Board of India. Do you know who is currently leading IBBI? Who is the head of IBBI? Anyone? Head of IBBI. If we talk about his name, then the current head of IBBI is Ravi Mittal. Okay. So yes, moving forward with the question, the correct answer this time would be option C, which means IBBI has proposed increasing the timeline for corporate debtors to respond to default confirmations from 9 days to 21 days, which means previously it was 9 days and now it has been changed and come up at 21 days. What is the reason behind this particular decision? It is just to ensure that the default information is authenticated and not challenged during the insolvency proceedings in any manner, right? Next question is asking, what is the primary role of information utilities in the insolvency process? Whether providing loans to insolvent companies, managing corporate assets during insolvency, option C, that is offering high quality authenticated information about debt and default, or option D, resolving disputes between creditors and debtors. What is going to be the correct answer this time? Simply asking the primary role of IUs, which are information utilities in the insolvency process. Have your time, have 10 seconds. Think about it properly. Should it be A, B, C, or D? I'll be quite like, okay? Think about it. What should it be? At least, guys, try to answer. See, till time, I always repeat this thing. Till time you won't even try to answer it out, you would never be able to get that sort of confidence. In examination also, there would be certain questions which you would not be knowing already, but you would definitely have to do that tukka thing, na, right? So here also, try to answer it out. Think about it. Maybe it would get the right one. So yes, Jimmy is saying it should be option C. Okay. Anyone else? So guys, yes, this time the correct option is option C, which means IUs are essential in the insolvency process because they do provide high quality authenticated information about debt and default, which is crucial for stabilizing or the establishment of defaults before the adjudicating authority. Clear? So yes, Niladri and Jimmy both are correct with this one, which is option C. Next question is asking which public sector bank contributed the highest profit in financial year 24, whether it is PNB, State Bank of India, Bank of Baroda, or option D, that is Canara Bank. This is a nice question, of course, and it is simply asking the name of that public sector bank that has contributed the highest, okay, the highest profit in FY24. What should it be? Punjab National Bank, SBI, BOB, or Canara Bank? What should it be? Jimmy Tiger and Sohan both are with option B this time. That is the State Bank of India. Okay. Let us check. Of course, it is the State Bank of India, guys. So, if we talk about what was the exact amount, SBI contributed over 40% of the total profit in FY24. Okay. And it was of worth 61,077 crore rupees. Right? So, yes, Niladri, you are also correct. That is SBI. Okay. Now tell me first, who is the current CEO of SBI? Along with it, where are the headquarters? Headquarters, head, and tagline. These three things. Static questions. Tell us fast. What should it be? Where are the headquarters of SBI? Niladri? Anyone? First question. Where are the headquarters of SBI? No one is knowing how come it be possible. Niladri, Jimmy, Sohan. No one is having any idea. Yes, very good, Sohan. SBI is being headquartered in Mumbai. And who is the current head? Okay. So yes, if we talk about current chairman of SBI, then his name is Chala Srinivasulu Shetty. And what is the tagline of SBI? No one? What is the tagline of SBI? Quick, guys. No one is knowing. Okay, so if we talk about the tagline, then it is the banker to every Indian. Great. So yes, now coming up to next question, which is asking, what strategy has the government implemented to turn around the performance of public sector banks? Whether digital banking transformation, 4R strategy that is recognizing NPAs, resolution, recapitalization and reforms. Option C that is increasing interest rates, or option D, expanding international operations. So what is the basic strategy that government has implemented to turn around the performance of public sector bank? Anyone? Okay, so Sohan, maybe Sohan is answering for this particular question, that is B. Jimmy is saying B, Niladri is also saying it is the 4R strategy. Great. This is the option B this time. So government's 4R strategy, which includes recognizing NPAs transparently, resolution and their recovery, recapitalization of PSBs, financial reforms, it has significantly improved the performance of public sector banks. So what is the government's new implementation? What is the new strategy? It is the 4R strategy. So yes, Akshay, you are also correct. Now, coming up with next question, what new role has SBI taken at the India International Bullion Exchange, that is IIBX, in May 2024? Whether it is market regulator, trading cum clearing member, gold importer, or option D, that is financial advisor. What is the new role here we are talking about? What is something which SBI was not doing previously but has now been intended to be doing certainly at the IIBX in May 2024? What should it be, Akshay? Anyone? Niladri and Sohan are saying it should be B. Jimmy saying it should be option C. My friends, yes, it is option B. That is, SBI has become the first bank to be a trading cum clearing member of the India International Bullion Exchange at the Gift City in Gujarat, Gandhinagar, right? It will definitely enable it to trade and settle transactions on behalf of its clients as well. Next question is asking, what are the expected benefits of SBI becoming a trading cum clearing member of India International Bullion Exchange in May 2024? From our last question, previous question, we came to know that SBI will now be working as a trading cum clearing member as well. So this is asking what is going to be the new additional advancement, the new additional expected benefit of SBI is becoming a trading cum clearing member. So whether it is increased gold prices, enhanced transparency, efficiency and accessibility in the bullion market, option C, that is reduced import duties on gold, or option D, introduction of new gold mining projects. What is it going to be? What are the expected benefits of SBI becoming a trading cum clearing member of IIBX? Okay, Sohan is saying it should be enhanced transparency. Others are also with option B. Great, this time also the most chosen one is correct. That is option B. So yes, SBI's new role is definitely expected to boost trading volumes at IIBX, and it will bring transparency, Efficiency and accessibility to the bullion trading market, according to SBI chairman. Okay, so this is something. It is being written as SBI chairman Dinesh Khara, but now has been changed. Okay, Mr. Shetty. So yes, keep these things in your mind. Now, what concern has Fitch Ratings raised about Indian banks' underwriting standards? Decreasing loan approvals rate, rising interest rates, untested risk due to rapid consumer loan growth, increased focus on international markets. Here it is simply asking the concerns that Fitch Ratings has raised about Indian banks' underwriting standards. What should it be? Should be option A, B, C, or D. This time I'll be giving you 5 seconds. Think about it. What should it be? What should be the correct option? Okay. Anyone? No one is having any idea till time. Try to answer at least. See, if anyone is not knowing what are these Fitch ratings, then Fitch rating is a credit rating agency. What is it? It is a credit rating agency, right? That evaluates the financial stability of companies and governments also to determine the likelihood of debt defaults. So yes, that's all. What is the basic work of these Fitch ratings? And the CEO of Fitch rating is Paul Taylor. Okay. It was founded on 24 December 1930, being headquartered in New York. Let me write it here as well. Being headquartered in New York. So yes, has anyone answered it? No one is having any idea still. Okay, if you have answered, great. So yes, Sohan, Sandeep, Niladri, this time, friends, it would be option C. That is untested risk due to rapid consumer loan growth. So yes, Fitch Ratings highlighted that rapid growth in consumer loans may challenge lenders' underwriting standards and risk controls, posing untested risk also. Next question is asking, what is the total amount of dividends public sector banks are expected to pay to the government in FY24? Whether it should be rupees 13,804 crore, 1,41,203 crore, option C, that is 18,013 crore, or option D, that is 11,300 crore rupees. What should be the total amount of dividends the PSBs are expected to pay to the government in FY24? Think about it. What should be the exact amount here? So Sohan has already answered with option B. Others are also saying option B and C. Okay. So yes, this time, friends, it is option C. That is, the public sector banks are expected to pay dividends totaling rupees 18,013 crore to the government. What does it basically reflects? It reflects a 30% increase from the previous year. Okay. So now we'll move to next question, which is asking, which bank declared the highest dividend per share among public sector banks in FY24? See, from previous question, we came to know the exact amount, and this time it is asking the name of that bank which has declared the highest dividend per share. Whether it is Canara Bank, Bank of Baroda, State Bank of India, or Indian Bank. Okay, so two have already answered. Great. It should be option C. So yes, this time, of course, my friends, it is the State Bank of India that has declared the highest dividend among all PSBs. And what is it? It is at rupees 13.70 per equity share in FY24. Okay, and it is the highest relative to its face value. Great. So now moving to next question, which is asking, what milestone did the Receivables Bills Exchange of India Limited, that is RXIL, achieve in terms of invoice financing? Financed 10 lakh invoices totaling rupees 10,000 crore. Financed 50 lakh invoices totaling 50,000 crore rupees. Option C, that is financed over 50 lakh invoices totaling rupees 1 lakh crore, or option D, financed 5 lakh invoices totaling rupees 5,000 crore. It is simply asking the milestone, the new thing which RXIL has achieved in terms of invoice financing. So friends, Sohan is saying it should be C. Others are also with option C, which is the correct one. Which means RXIL, what is it? It is a trades receivables discount system, trades platform. It has reached a significant milestone by financing over 50 lakh invoices, which amounted to a total of rupees 1 lakh crore. This achievement underscores its role in providing essential working capital solutions to MSMEs, and of course, it also highlights its capacity to support the economic activities of small and medium enterprises. So yes, it is making such a huge amount in terms of invoice financing. So definitely, it will definitely be supporting the MSMEs, and it highlights its capacity to support the economic activities of these small and medium enterprises at the same time. Next question is asking, what is the primary purpose of the $500 million financing provided by IFC to HDFC Bank? To fund technology upgrades in banking, to provide educational loans. Option C, that is to increase microloans for underserved women, or option D, that is to support corporate financing. This question is simply asking, what is the primary purpose of $500 million financing which is being provided by IFC to HDFC Bank? Take your time, think about it. Giving you 10 seconds now. Go through the question, go through the options. I would not be interrupting in between. Okay, so first of all, let us discuss about the aesthetic portion. So what is IFC? Anyone? It is International Finance Corporation. And if we talk about who is the managing director of IFC, then his name is Makhtar Diop. Headquarter of IFC, Washington, DC. Okay. So yes, you have already answered that it should be option second. Few are with option C. Okay, no issues. So this time the correct option, my friends, it would be option C. That is to increase microloans for the underserved women. See, this $500 million loan from IFC to the HDFC Bank is specifically intended to ramp up microloan offerings to underserved women in India, and it will facilitate greater financial inclusion and socio-economic development, both at the same time. Clear? Next question is asking, what is the amount of the surplus transfer approved by the RBI to the government for FY24? Whether it is of rupees 1.76 lakh crore, rupees 2.11 lakh crore, rupees 87,416 crores, or option D, that is rupees 1.02 lakh crore. Here we have to answer the amount of the surplus that is being transferred and is approved by the RBI to the government for FY24. What should be the exact amount? Should it be option A, B, C, or D? What should it be? Okay, so Jimmy Tiger is saying it should be option C. My friend, it would be option B. That is 2.11. Okay. So yes, Niladri, Sohan are also correct. See, you can remember it like 2, 1 plus 1, right? So yes, 2.11. Okay. So yes, the RBI Central Board has approved a surplus transfer of rupees 2.11 lakh crore to the government for FY24, which is an all-time high till the date. Next question is asking, what impact could the RBI surplus transfer have on government securities, that is GSEC yields? Increase yields? No impact. Lower yields? Make yields volatile. What is that basic impact which RBI surplus transfer have on government securities? That is the G-Sec yields. What is it? Increased yields, no impact at all. Lower yields make yields volatile. Think about it. Have 5 seconds. What should it be? Should it be option A, B, C, or D? Okay. So yes, dear, you are correct. It is option C. That is the surplus transfer could allow the government to borrow less, which could soften G-Sec yields and lower the borrowing cost. It's a very basic thing, dear. See, it is asking the impact that RBI surplus transfer have on government securities yield. See, RBI has provided surplus transfer. Surplus means the additional. Okay. So yes, for an example, if RBI was supposed to provide like rupees 5 and it is providing additional surplus of rupees 5, in total, it is providing rupees 10. Okay. And already the GSEC yields used to tend for like 15 rupees. So this whole 10 rupee is being provided by RBI surplus itself. So yes, the yields would definitely get lowered from the side of GSEC. GSEC, that is the government securities yield, would definitely be lowered because the surplus amount, the additional amount is being already provided from RBI. So it would not increase the yield. Impact would definitely be there. Yield would not get volatile at all. On the other hand, it would definitely get lowered. Okay, because it is already getting the surplus is being transferred, so there is no need for the additional or the increment in the borrowing cost. So borrowing cost would definitely be lower and the GSEC yields would get lowered, or you can call it will get softened, right? So yes, next question is asking what percentage of lower middle class consumers expressed interest in using credit on UPI according to the Home Credit India study? 24%, 42%, 64%, or 21%? Question is simple. It is asking the percentage of the lower middle class consumers who have expressed their interest in using credit on UPI according to the Home Credit India study. Okay. Take your time, have 5 seconds. We just have to tell the percentage of not middle class people. Even here they are talking about the lower middle class consumers who have shown, who have expressed their interest in using the credit on UPI. Okay, Jimmy is saying it should be C, Sohan is saying it should be 64%, but dear friends, this time it would be 42%. So study revealed that 42% of lower middle class consumers are interested in using credit on UPI due to its benefits like quick loan access and ease of payments at the same time, right? Next question is asking, what would cause 64% of consumers to stop using UPI according to the Home Credit India study? If it became unavailable, if it had technical issues, if it became chargeable, if it required additional verification. Sandeep, you are absolutely correct. So yes, what is it? What would be the basic cause, basic reason which would lead 64% of consumers to stop using UPI according to Home Credit India study? If it became unavailable, then of course no one would be able to use it. Not only 64, 100% of the people would not be able to use it, right? If it had technical issues, still UPIs go with like these technical issues and people do use it. We do wait for it or the relocation for it, but yeah, we do use it. So if it required additional verification, we would still not be having any issues in undergoing these verifications, additional verifications, because it would lead to our security. But if it became chargeable, definitely if I have to transfer like 10 rupees to someone and it would be costing me 11 rupees, which means UPI would be requiring 1 rupee as a chargeable amount. Okay, I would never be using it. Believe me, as a person, I would never ever be using it. So yes, this is going to be the basic reason, which is option C. That is, if it became chargeable, then like 64% of consumers would definitely stop using UPI. Why people use it? Because it is because of its being cost-free service, right? So yes, this is all about this question. Now we would jump into next question, which is asking which European banks are seeking RBI's approval for a third-party clearing model, whether Barclays, HSBC, UBS, and Deutsche Bank, Credit Agricole, Societe Generale, Deutsche Bank, and BNP Paribas, Lloyds Bank, Credit Suisse, ING and BNP Paribas, or option D, that is Santander, HSBC, UBS and Deutsche Bank. What is going to be the name of those European banks which are seeking RBI's approval for a third-party clearing model? Jimmy Tiger has already answered it with option A. Sandeep is saying it is option B. Okay, let us check. This is going to be option B, my friends. That is, the 4 European banks are namely Credit Agricole, Societe Generale, Deutsche Bank, and BNP Paribas. Okay. So yes, that's all about this question. The tongue twister names of these questions. And tomorrow also, we would definitely be meeting same time, same place, same person. And we would be starting with our further questions. We would here be meeting on a daily basis for like 30 minutes, friends. And if you are getting interest in these classes and if you are getting things properly, then definitely you can be keeping ahead with us and do join the course which is being provided by our official channel Knowledgist, and the whole information of those courses are being provided in the description box. The link is being provided there. You can go through the link, check it out from there. Otherwise, you can do contact us on a direct basis, right? So yes, do like, share and subscribe our channel. Till then, signing off, Pragya this side. Bye bye everyone. Yes, welcome Sandeep. Good night, Soham. A very good further time to everyone. Study hard, right? So yes, till then, bye bye.